did Bitcoin's sudden price drop last week just change everything? Welcome back, everyone. Let's dive right into it because, hey, 2 weeks ago, everybody was excited. ETFs are coming. That's it. All the big legacy money. And now all of a sudden, that's it. We are going into the worst recession. And boom, here we go. 1930s style depression. It's all over, guys. It's all over. Pack it in. Okay. So I'm just being hyperbolic. All right, let's dive into this because apparently the corporate-owned media obviously seizes on every opportunity, right, to capture our eyeballs. And let's dive into this and see if we can make heads or tails. Bitcoin chart resembles the 1930s stock market after Wall Street crash. Oh, you got to be careful. The senior commodity strategist at Bloomberg, Mike McGlone, believes Bitcoin could be in trouble as its price chart resembles the 1930s stock market's chart following the major crisis that took place in 1929. More specifically, McGlone also makes a comparison to Roger Babson, a well-known statistician and entrepreneur back in the days who began warning about elevated equity prices. Before this idea was brought by Irving Fisher in 1929, who proclaimed a permanently high plateau in 1929, which obviously it's not permanently high because we continued to go back up. So anyways, and it wasn't a plateau in any way, shape, or form. But again, it's not to discredit the seriousness of what happened. It was absolutely brutal. I mean, I wasn't there, but from what I read, it was obviously incredibly devastating, and we saw World War II come of this. Anyways, McGlone seems to compare himself with Babson as he points towards similarities between Bitcoin's chart from 2012 to 2023 with the stock market's chart from 1920 to 1931. The senior commodity strategist blames the U.S. Federal Reserve for shaping his bias towards a stance similar to Babson's. It's very interesting. That's a very interesting comment, okay? That the U.S. Federal Reserve is shaping his bias towards. Now, I understand that he is putting the onus of this on the Federal Reserve, but they are not. They're not the only ones to blame, right? I mean, the government is the one that requires the constant money printing to fund all of these different programs. So, as much as we all dislike the Federal Reserve, as much as I don't like that institution, and it is not a government institution, right? It is just a private corporation that issues our currency. You know, as much as people don't want to believe it, it is. Sorry, they are not part of the government. You know what? They are not the only ones at fault here, okay? Because the government is like a heroin addict. So when it comes to the money printing. So I don't entirely just blame them, but I understand his point. If Mike McGlone's analysis is accurate, the leading cryptocurrency could be nearing a major drop that would surprise the vast majority of investors, like what happened in 1930. All things considered, the digital commodity's ability to meet the above analyst expectations will depend on further development related to Bitcoin. So essentially what he told you is, what he told all of us is, I'm scared. I see things that look like 1930, but they may not pan out if a whole bunch of other things don't pan out. So really, by the time you get to the end of the article, it's like, hey, I want to fill you. I want to fill you with fear, but at the same time, I just want to remind you that I'm not really sure what's going to happen. So, okay. So number one, let's go take a look at Mike McGlone's actual tweet before we take a look at some of the similarities or differences between the stock market of 1929 and today's market. And also keep in mind, Bitcoin is not an equity. Okay, so there's nobody that can just simply issue more Bitcoin because of the demand of Bitcoin, as opposed to stock, right? If there is an incredibly high demand of stock, you can actually issue more shares. Or what you can do is you can split the shares. So essentially what happens is that each share gets split. So let's say you have one share, all of a sudden it would, for the sake of an example, it would get split into two shares. So let's say that one share was worth $50. Now it's split into two. Each of them are worth 25. So it's just a way of quote unquote making it more affordable. Sometimes I've heard references to increasing liquidity and trading volume. Anyways, that's all shenanigans. My personal opinion is that it's shenanigans. But anyways, let's take a look at Mike McGlone's tweet. Before we take a look at his tweet, for the people who don't know who he is, he's the senior macro strategist at Bloomberg Intelligence. So, just for the sake of arguments, he has a lot of very wealthy people, very hooked up people surrounding him. I mean, Michael Bloomberg is one of the richest people in the world. Okay. And so, of course, right, to a certain extent, if you were an institution that was accumulating Bitcoin, putting out this type of FUD right before the next halving, and it's not exactly right before, right? We're pretty much like a little less than a year away, but still, okay, putting out this information before the halving does allow some larger institutional buyers, really anyone, to purchase Bitcoin at what we hodlers believe is a discount. So just putting that out there, right? Like, none of us are better than our incentives. I hodl it because it's censorship resistant. I hodl it because the government can't fuck with it. So I am incentivized to tell you about all of the qualities of Bitcoin. Bitcoin appears similar to the stock market in 1930, as we read in the articles. Statistician and entrepreneur Roger Babson began warning about elevated equity prices well before economist Irving Fisher proclaimed a permanently high plateau in 1929. The Fed tilts our bias towards a stance similar to Babson. Okay, so he, again, right, reiterating, he is saying that based on the Fed's actions, he believes that we are headed for a 1929 style, 1930 style crash. Now, let's take a look. Okay, so here we go. Here's the Bitcoin versus stocks in 1930. And here we go. This is the Dow Jones Industrial Average, this white line over here. And here is the US discount rate. Okay, we're going to continue on over here. Let's take a look at Bitcoin. Okay, so the white line right up here, this is Bitcoin. Okay, and here is the US Fed funds rate. The only correlation that I see is the actual rise of the Bitcoin price. But in terms of the U.S. Effective funds rate, that doesn't actually look the same. So I understand that the Dow Jones seems to be the same as the Bitcoin 100-week moving average, but the fund rate doesn't match. So I'm not sure it's entirely correlated. Anyways. Okay, here's an interesting take from Benjamin Cowan, CEO and founder of some ITC crypto. Let's go take a look at what that shit is. One person will be randomly selected to get free access. Okay, so this is like some kind of a crypto newsletter. All right, anyways. Had an interesting take, though. This guy had an interesting take. So here we go. During the last 3 pre-halving years, Bitcoin fell below its bull market support band in August, September. The purpose of this correction is to flush out as many of the scams and cash grabs prior to the halving. I know I keep calling it the halving. I'm not calling it the halving. Sorry, it's not happening. No guarantee it happens this time, but certainly a strong possibility. And of course, he was proven right. Yesterday, we did close on the weekly candle. We did close below those support bands. So what this has to do with, okay, is this. Because you see, this guy's telling you, right, Mike McGlone, who works for Bloomberg, right, the traditional rails, the people who essentially are not purchasing, or at least that we imagine are not purchasing Bitcoin in the same way as Bitcoin enthusiasts and quote unquote, dare I say, crypto enthusiasts. He's part of the legacy system. So he's sitting here telling you that the whole thing is about to fall, like, the wheels are about to fall off. But then we go take a look at Benjamin Cowan, okay, who sells a crypto newsletter. And he's telling you not only are the wheels not falling off, they are following the exact same pattern as previous happenings. So what's the takeaway, guys? Okay. We are not necessarily seeing the same valuations that we saw in equities in 1929, number one. Number two, Bitcoin is not a stock. This is one of the first points that I alluded to. We're comparing apples and oranges. Now, granted, one of the things I can say that is similar that I read from the 1929 crash is that speculation at the time was at an all-time high. And I can't say that it's different this time because indeed we have the shitcoin markets and we have Bitcoin. So there is a very high degree of speculation in the markets. Okay. Seeing, certain equities such as NVIDIA trading at 236 times their earnings does indicate that the market could be seen as a little bit frothy, but there's people on the other side of that trade that would disagree with me. So, it's not about that. So look, I think the grand takeaway is this, okay? We really don't know what Bitcoin is going to do over the long term. We have some assumptions, we have some theories, and essentially this is why a lot of us, or at least specifically myself, this is why I preach to understand Bitcoin's qualities and features. Because once you understand its qualities and features, and if you decide that that is something that you would like to have, then it makes sense. But the problem is that when you don't take the time to understand Bitcoin's features and qualities, the censorship resistance, the fact that the government doesn't issue it, the fact that it has finite supply, the fact that it has sufficient decentralization. Once you understand those things, the everyday price and the FUD from the corporate-owned media, it doesn't really bother you. Like I woke up this morning and I read that article and, part of me did slightly panic. I was like, really? I'm like, this is looking like 1929 style crash. I don't know if I buy that. So I started doing some poking around. And, when I look at a giant company like General Motors, which I understand, I know that they've gotten money from the government and stuff like that. But if we take a look at General Motors back in 1929, they were trading at 16.9 times their earnings. And now they're trading at 5 times their earnings. And I just don't see that as fully valued. Granted, an argument could be made, well, Phil, we're only in 2023. If we compare the 1920s to today, technically 2023 was a bit of a 1923 was a bit of a tumultuous year, but there were massive gains that were had between 2023 and the crash of 1929. So another argument could be made that, maybe we are gearing up for that 1929 style crash, but we're still 6 years away. We don't have the same, we don't have the same economy that we had back in 1929. The world is much more connected today, which could be argued that would make the markets melt down faster, but quite possibly the opposite could be argued that that the market, because of its global nature and because of its interconnectedness and the speed of information, that possibly the market would be able to digest the information a lot faster. So, which would essentially create a little bit more of a recovery if a 1929 style crash was to occur. You gotta stay solvent. That's the Vikingo line, right? That he keeps harping on. You gotta stay solvent, and he's not wrong. Like this has been that's been one of my things, right? Like I invest. Before Bitcoin, I invested in equities, and I was the kind of person, I never put in anything that I could need in the next, and it has to do with your time frame. It has to do with your personal time frame. Okay. In my case, it had to be something that I wasn't going to use in the next 2 to 5 years. So I was willing to take those funds and put them into the stock market to work for me. Now, even though Bitcoin, I don't see it as an investment, it is a savings technology. At the same time, it's only been around for 14 years. Okay. We are still incredibly early. There is still a lot of volatility in Bitcoin. It really is a matter of your risk tolerance, and also your lifestyle, and just being true to yourself. Okay, so there's a lot of people throwing all kinds of different narratives out there. You should put everything into Bitcoin. You shouldn't have anything in Bitcoin. You know what? The real key is to know yourself, figure out what you're comfortable with, and make sure that you understand why you're actually choosing Bitcoin. Anyways, guys, that does it for today. Don't forget, like and subscribe, and I will catch you all tomorrow.